Did you know that according to Gary Black, a share buyback can help Tesla make up to $18.9 billion in cash and also earn up to $100 billion in free cash flow over the next 3 years. This means that the car company can invest in manufacturing more incredible tech products and eventually earn a top spot as the world's most valuable company. You're definitely not going to want to miss out on this info. Hey guys, welcome back to Everything Tesla Stock. The Tesla stock community is optimistic that a Tesla stock buyback is going to happen soon. And that's following numerous events of Tesla investors airing their pleas for Musk to buy back Tesla shares. And it is likely that the buyback is coming sooner than expected. Considering that Tesla stock is currently trading at a low price compared to the company's actual valuation, now may be the perfect time for the automaker to buy back its stock. What does a share buyback mean for Tesla? And why will the car company earn massively from this? Let's find out. If you're a big fan of Tesla, then stick around until the end of this video to find out what analysts think a share buyback means for Tesla, as well as the major catalyst that is going to cause Tesla share buybacks to happen even sooner than expected. Before we get into it though, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. Indonesian-born businessman Leo Kogoan was the third largest private investor in Tesla, and had previously said that Tesla's PE ratio compression can be solved only by a buyback or by 2 times earnings increase. Leo Kogoan is one of the many Tesla bulls who believes that the company's stock is currently undervalued. According to him, Tesla can invest in FSD, as well as its robots and factories, while buying back its undervalued stocks. Following Musk's response to this, stating that he had noted Kogoan's suggestion, this fueled speculation that Tesla could launch its first ever share buyback. And because of this, the electric vehicle maker is expected to spend some of its considerable cash pile on investor returns. A stock buyback occurs when a company buys back its shares from the marketplace with accumulated cash. It is also known as a share repurchase. A stock buyback allows a company to reinvest in itself as the repurchased shares are absorbed by the company, reducing the number of outstanding shares on the market. A buyback benefits shareholders by increasing the percentage of ownership held by each investor and reducing the total number of outstanding shares. In the case of a buyback, the company is concentrating its shareholder value rather than diluting it. Companies benefit from the stock buyback because it can conserve stock prices, consolidate ownership, and take the place of dividends. Similarly, investors can benefit because they receive their capital back. Luckily, Tesla CEO Elon Musk has confirmed plans for a Tesla stock buyback during the automaker's Q3 earnings call. According to Musk, a buyback has been debated extensively at Tesla's board level, and the board generally think that it makes sense to do a buyback. Musk stated that Tesla wants to work through the right processes to do a buyback, and it is certainly possible for the automaker to do one on the order of $5 to $10 billion. At Tesla's recent Q3 2022 earnings call, Musk addressed several issues including a Tesla stock buyback, and explained that even in the downside scenario next year, Tesla still has the ability to do a $5 to $10 billion buyback. According to Leo Kogoan, Tesla will have a huge market cap by the year 2030. And if it can do a $1 trillion buyback between 2026 to 2023, then that's gonna happen. Kogoan said in a tweet that he had requested that Tesla does a $100 billion share buyback from 2022 to 2026, and then another $1 trillion buyback from 2026 to 2030. Going further into detail, the Tesla bull stated that if Tesla buys back its shares at $1,000 per share between 2026 and 2030, it will remove 1 billion out of the 3.14 billion shares available today, reducing the number of outstanding shares to around 2.14 billion. Since there will be fewer shares available for investors, the stock price can potentially shoot up from $3,000 to $5,000 per share. Like Leo Kogoan, several other Tesla investors like Gary Black and David Collas, who are co-founders of the Future Fund, in which Tesla is the single biggest holding, also see a share buyback as a good opportunity for Tesla. The analyst wrote an open letter to the Tesla board, suggesting a $10 billion share buyback. According to him, Tesla is now operating from a position of outstanding financial strength, with $18.9 billion in cash and marketable securities, and virtually no debt. Tesla reported production and deliveries for the 9 months that ended September 30th, 2022. And the figures, although slightly lower than expected, were significantly higher than that of its competitors. Likewise, a ramp-up in its global capacity appears to be on track to meet the strong demand for its products into 2023. The car company, while suffering from an undervalued stock price, is still poised to record better figures in the future. In another tweet by Leo Kogowan, he stated that Tesla's free cash flow amounted to $2.2 billion in the first quarter of this year, and he expects that figure to climb to about $8 billion by the end of the year and $17 billion by 2023, after capital expenditures have been factored in. Tesla's year-to-date production and deliveries indicate solid execution on capacity expansion to support strong demand for its products amid ongoing supply disruptions. The car company produced more than 365,000 vehicles in the third quarter, taking its year-to-date levels to nearly 930,000 vehicles, up nearly 50% year-over-year, and putting the automaker on track to achieve its average annual growth target. Tesla is experiencing increased demands and is working out ways to conveniently sort out these demands too. The automaker recently cut the delivery time for all Model 3 and Model Y vehicles to a minimum of 1 week. Prolonged waiting times have been a major issue for people who wish to buy Tesla cars, but with wait times reduced, demands for the EV may go up even higher. In another tweet, Kogowan suggested that Tesla can invest in FSD technology, its Optimus robots, and new factories while also buying back its undervalued stocks. Speaking on this, Tesla investor and YouTuber Dave Lee stated that Tesla could possibly reach this milestone if it is successful in recording increased earnings for its full self-driving technology and its humanoid robot. The Tesla bot is expected to broaden Tesla's mission to not only improve sustainable energy by making electric cars, but also making AI affordable and accessible. According to Dave Lee, Tesla does not have serious expenditures that need to be catered to, and can currently afford to allocate 80 to 90% of its funds to a share buyback. Lee stated that suppose Tesla successfully rolls out its FSD software and makes about $20,000 to $25,000 operating profit per vehicle, it could raise more than $1 trillion from it. But that's only if it sells about 10 million vehicles a year, which is about $250 billion per year for about 4 to 5 years. And now to the major reason why Tesla's share buyback will be happening very soon. Starting January 1st, 2023, companies issuing public securities and listed on a US stock exchange are subject to a 1% tax on share buybacks. This new ruling is part of the Tax Cuts and Jobs Act that was signed into law by President Trump back in 2017. This ruling aims to raise revenue from shareholders who have benefited from the recent corporate tax cuts under the act, while encouraging firms to invest in their businesses or employees instead of buying back shares. The US Treasury estimates that the proposed rule will raise $19 billion over 10 years. While it is expected that those affected by this ruling will be able to tap into other sources such as increased dividends, debt financing, and retained earnings for share buybacks, some economists that are concerned with the 1% tax could lead to lower long-term stock prices due to a decrease in demand for shares. Others worry that this ruling could disadvantage small businesses, which rely on share buybacks as they tend to lack access to other financing options. Nevertheless, the US Treasury expects the new ruling will encourage companies to focus more heavily on investments, such as research and development, infrastructure improvements, and higher wages, rather than share buybacks. However, as this tax does not apply until January 1st of next year, there's still time for companies like Tesla to take advantage of share repurchases before the tax takes effect. In addition, those who invest in stocks should be aware that this forthcoming rule is going to be there, and they should keep an eye out for any changes in the amount of share buybacks by companies. That's going to help investors make more informed decisions about their investments and ensure that they are not adversely affected by the new tax. Overall, the 1% tax on share buybacks is an important change to be aware of for both businesses and investors alike, as it could have a significant impact on share prices come January 1st next year. Tesla may be doing its share buybacks this year then, in order to avoid the expected tax come next year. Do you think a share buyback is going to be good for Tesla? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.